Welcome to the market update for the month of November. Overall, markets were positive on the month of November, continuing a slow and steady grind of positivity through the back half of 2025. Canadian stocks, as measured by the S&P TSX, were positive 3.71% on the month, which was fantastic, and they materially outperformed the US this month. The S&P 500 did eke out a slightly positive return of 0.13%. A stronger loonie in Canada, which was up 0.27% against the US dollar, meant that US equities total or net return was actually slightly negative when converted back into the Canadian dollar. In the Eurozone and Asian markets, they were also slightly positive on the month, managing a gain of 0.46% in November, as measured by the MSCI EAFE index.
When it comes to central banks, neither the Fed or the Bank of Canada met or made any interest rate decisions in November. So the markets are still pricing in further rate cuts for December in the United States. A survey by Reuters of economists suggested that the overwhelming majority of economists predict another quarter-point cut in the United States in December. And that expectation has been generally supportive of credit markets and equity markets in the United States. In Canada, the expectation is more probably of a pause in December, so maybe not necessarily a cut, but both central banks are warning that tariffs, the impact of the trade war is starting to filter through into the economy. And we're seeing little signs of that. Obviously, in Canada, certain sectors are being hit more than others, with Algoma Steel recently laying off 1,000 workers in Northern Ontario. These sort of examples of layoffs in certain sectors are starting to become more frequent. And so the central banks, both in the US and in Canada, are expecting that tariffs will filter through into the economy further into 2026, and there may be weakness in certain industries. And so there's certainly an expectation that monetary easing is going to continue to be the trend, at least in the early part of 2026.
As David mentioned, the North American trade barriers and tariffs continue to be a background risk for markets in North America. Obviously, we all remember in early 2025, the US implemented 25% tariffs on products from Canada and Mexico, with a smaller 10% tariff on Canadian oil and energy. Now, thanks to the USMCA agreement, 85% of Canadian exports and about 84% of Mexican exports are exempt from those tariffs. So that does create some relief for many products. But there still are many in the auto, steel, and aluminum industries that are directly affected by these tariffs on a continual basis. Canada did retaliate with tariffs of our own, but then removed many of the counter tariffs on September 1st, but leaving certain tariffs in place in targeted areas like steel, aluminum, and autos. The Bank of Canada has been very blunt when talking about the tariffs, that saying the tariffs themselves and the constant policy reversals will have negative effects on the Canadian economy and our ability to produce growth, that raising costs for businesses will also bleed down into the consumer products and will raise the cost of everything, even for industries that aren't directly related to the tariffs.
So tariffs heading into 2026 continue to be something that we are monitoring. Portfolio managers are avoiding certain sectors, overweighting to others that maybe are less tariff sensitive heading into next year. But really, we haven't seen the shoe drop as far as tariffs go. Now, the good news is that, like we've seen before, Trump can always repeal certain tariffs. We've seen it recently on certain consumer products like beef, other consumer staples that people buy all the time, and that they're hearing complaints about down in the United States, that the costs of these goods are increasing as a direct result of tariffs. So he has shown in the past that he is willing to repeal some of those tariffs. And with US midterms coming up next year, there could be further pressure to repeal more tariffs and drop so much of the protectionism that we've seen so far in Trump's second term as president. So, as always, if you guys have any questions about the markets, about your portfolio, as we head into the year end, please don't hesitate to get in touch. And for those of you who we may not talk to before the holidays, wishing you and your family a warm and bright festive season.
Take care.